Hello, everyone. Welcome to the tax update for weekly tax update for February 16th, 2024, episode number 93 as we approach in on that landmark 100th episode of Time Wasting. But thank you again for joining us this week. If you'd like to catch me live at all of these events, we will likely be having a mixer. These aren't events sponsored by us, but we'll be there. I'm the speaker. Nevada Society of Enrolled Agents, May 15th. Now, that could be fun. That involves gambling and alcohol all at the same place. Latino Tax Fest, my annual pilgrimage. They've moved the date this year. It's going to be the end of June, ahead of all of the IRS forums. So join us in Las Vegas in June. That'll be 2 months in a row out in Vegas. July 18th, I will be at the New York, Connecticut Association of Tax Professionals in Danbury. I'll be speaking on demystifying the consolidated 1099-B. It's going to be one of the greatest programs I've ever given just as soon as I write it. Not mentioned here, Frank Agostino's barbecue is officially going to be June 26th this year, Wednesday, June 26th. That's also going to be an exciting program. CSEA, I will be there as well, June 11th and 12th. I think I have an 8 a.m. on June 11th. Use of AI in reporting and replying to federal tax notices. And Weird Science, the ethics program on the misuse of AI in the tax practice that will be revised and updated for 2024. If you get out that way, I hope to see you there. We'll be doing, as I said, a little mixer at each. If you're not a subscriber, you should be. You can join now, $52 a month, and get all of our content for that same $52. Tax season support has a few slots open in the seasonal program. $1,097 gets you 3 visits. A Tuesday night with me for 2 hours, Wednesday for an hour with Rita Ryan to do all our international questions at one time. And then on Friday at 3 p.m., an hour and a half again with me. It's a small, intimate group and lots of opportunity to get your questions answered. So consider joining us. Happy to announce as we're putting things together for the season. I said, have we advertised this yet? So Jessica Smith is going to do When They Owe But Can't Pay. It's a solutions to timely filing. The idea is those folks that don't expect to owe. And you tell them, by the way, you owe $2,000, $3,000, whatever it is. Oh my gosh, I can't possibly file. I'll have to can I have an extension? Can I have my papers back? We want to give you the tools, even if you don't do rep work, give you the tools so you can calm these folks down and say to them, you're going to file. We're going to file on time. Here are the things that are available to you. And you'll feel very, very well armed at this point. So even if you're an employee of someone else's, I think this is an important hour. Please come. It's if you're a subscriber, it's included. So please come. Hour. And a free CE. It'll be available on demand. IRS Nationwide Tax Forum dates. Here they are in July, August, and September. They've moved around a little bit. Same familiar locations. They've changed the dates a little bit. Chicago in July looks exciting. I'll remind you that last year San Diego sold out early. And Baltimore, the hotel sold out. I noticed they have 2 overflow hotels. So Baltimore should be a good one as well. Baltimore's a nice ride for me. And no, Mark can't drive down with me. So, can we come to the mixer even if we are not at CSEA? I think so, Katie. I'll give you my cell phone. You text me. We'll get you in. It should not be a problem. Mike is asking Friday support. Remember, there's 2 support groups, Mike. There's the those of you that are year-round members, that's at 1 p.m. And the seasonal group meets at 3. So, all right. So we're back. Interesting, some of these things that are back. So the weekly statistics numbers are back, and they're giving us this handy little chart. Now, the one important thing to remember is because of the way the dates started this year, there's actually 12 days. We had 12 days in because the season started on the 23rd. We had been receiving 12 days last year by February 3rd. But this year, we've only been receiving them for 5 days as of this week. So they feel that these 20% decreased returns are actually okay. It's interesting to note, if you look down at the number of refunds, right? They had almost 8 million refunds filed by this time last year. This year, only 2.6 million. And I think that's because not so much the number of days, but the number of weekends. You had one less weekend available. So I think that now we're going to see the weekly number go through the roof for that week, but the year-to-date numbers make sense next week. So the only real thing that I do want to say, in a handful of days, they have 10 million returns filed, which is, to me, is just amazing in that short period of time. And the number of web accesses at 104 million. How many of those are us, right? It's only down 1%. So with all those less days. So what I think is interesting is that web usage is going to be through the roof. Tools are going to be through the roof. And that reminds me, I meant to grab a screenshot, and I didn't, of something Ellie Jones showed us today. And that was, she had gone in at 8 o'clock this morning to do something on the IRS website on TDS, right, to download some transcripts. And it said to her, "Hi, you're 492nd in line to get into the website. Once it's your turn, you'll have 10 minutes to access come in. Otherwise, you lose your space in line." So apparently they're trying to manage the number of users on the database, and they can do that, or on the website, and they can do that because you're going through ID.me. Helen O'Planick said on Facebook that maybe that's being caused by the number of people looking for their delayed refunds because of tax credits. I think they would normally be released the end of the month, so people are probably checking their balance. They're familiar that Fridays are a big day for IRS direct deposits. So are they looking today? I can't say if they are or they aren't, but that's super interesting. Okay. So comparing some information, the IRS is a website now where they tell us the current status of processing, not necessarily the numbers, which I miss, but that number, that COVID operations page has still not been updated since December, telling us how many items are in inventory, but rather they are telling us what month's work they are on. So last week they were on January 1040 returns. Now they're on February 1040 returns. I expect that's always going to be the current month. Amended returns, they have not progressed. They are still stuck back in August, still 6 months in the past. Business returns, similarly, we're processing the current month's 1120 returns, which include 1120S returns. Amended returns have not moved. 941s, except ERTC, have not moved. They don't appear to be processing ERTC returns at all right now. Form 1041 has moved along to February of 2024. Again, I expect they will always be working on the most current returns. As far as other forms, the W-7, we said this, that the I-10 unit was probably the quickest unit to recover from a disastrous experience in COVID, and they pretty much are processing current month's submissions, which is pretty good. Form 8802 is starting to get a little bit behind. Otherwise, though, nothing else seems to be moving, which is a bit disappointing. And as I mentioned on the COVID operations page, the inventory numbers have not changed since December 9th. I don't think they're going to update this anymore. They did a great job for almost 4 years letting us know what was going on, what the inventory levels were. They weren't consistently reporting. Everybody didn't have the same cutoff dates. So you got a feel for it, not a perfect feel, but it's sad that they've cut this off. But as I told someone else in an email today that has a congressional inquiry as to the status of the ERTC, which I think is funny. I said, they think they're all fraud. They're not going to tell you what's going on with it. But there were 1 million of these things sitting in inventory back in December. There's got to be another couple 100,000, especially once they spoke about the potential cutoff day. I want to give you an update on the Tax Relief for American Families and Workers Act. Surprise! It's not passed yet. The Senate took no action on it. So the Senate is on recess this week, as is the House. But Senate Finance Chairman Ron Wyden, a Democrat from Oregon, important that he's a Democrat, urged Chuck Schumer, who is a New York Republican, to bring the House tax bill to the floor after the Senate's recess is over next week. Last week, they debated the Ukraine and Israel funding. They were pretty much obsessed with getting that done. They also had the Mayorkas vote, and now they're going to have, when they come back, Congress is the House is going to have his impeachment trial. So this is going to be very interesting. What if they have the time to actually get this work done? Wyden has mentioned that the delayed enhanced child tax credit provisions in the bill are going to have costs. We've said the Democrats count this as household income. They are looking forward to these changes so they can state they've increased household income. And it does increase income to people. But in a balanced statement, he also mentioned that there are significant consequences for some businesses that are relying on the enhanced business interest deduction or the positive changes to both bonus depreciation and research and development costs. So Congress will be back on February 26th. Another week they're out. But some of the Senate Republicans are still not pleased with the legislation. They focus on this. There's a way to get the refundable child tax credit now without working, and they're all focused on how that's going to discourage people from working. I hope that they really don't believe that, and they're just saying it, although that doesn't make it much better. But the belief is, in reading Politico and some of these blogs, is that the funding for the federal government for the remainder of fiscal 2024 is going to be something that's super important when they get back. We're 6 months into the fiscal year with no budget. So they've got to put that together. It's unclear if so. That being said, there's been some push that no more continuing resolutions. We have to adopt a budget. So we may come back to a government shutdown, which I hope doesn't happen in March. It's also unclear if the tax package right now can get 60 votes in the Senate by itself or whether it needs to ride along with the appropriations bill. Now, that could also be a problem as well if the appropriations bill doesn't pass. Over at the House, remember on last week's episode of As the House Turns, Speaker Johnson made a promise to a group of Republicans that he would, to get them to support the bipartisan tax bill, the 2024 American Rescue Act, that he would bring their SALT bill to the floor for a vote. The House voted 195 to 225 to not advance the bill. It was going to double the cap on state and local tax deductions for married filing joint couples with an AGI of $500,000 or less. This says something about the blue state Republicans that had fought Johnson to get the consideration. They fought him, he gave it to them, but they didn't have any other juice to get this thing done. Now, those of you on the island of Long, Henry, Cheryl, Abby, others, former Representative Tom Suozzi, who has replaced Mr. Santos, last time he was in the House, he led the fight for an increase in the SALT cap. And I think he got it to a vote, even though it was voted down. I couldn't find that in time. But I think that he's going to be our new push to get the SALT cap passed. So in case your clients ask about this, the paid leave tax credit is possibly going to be made permanent. Two folks I never heard of, Angus King. I've heard of Amy King. Angus King and Deb Fisher. They introduced this bill that's going to make the paid leave credit permanent and expand the accessibility to smaller businesses. Most employers right now can get a credit of as much as 25% for providing employees with paid leave. That incentive is set to expire in 2025. Randy Feenstra, another guy I've never heard of, sits in the House Ways and Means Committee. He's planning to introduce similar legislation in the House. I bet you if I ask AJ, he's going to tell me he has coffee with the guy. It's likely not going to be seriously considered, though, until 2025 when we start talking about extenders on Tax Cut and Job Act, right? Because the whole Cut and Job Act goes away. What are we going to keep? What are we going to lose? So on Wednesday, while they were not putting a federal budget together, the House Financial Services Committee had an oversight hearing. They were speaking to their leaders at FinCEN, and something I had never heard of before, the Office of Terrorism and Financial Intelligence. They've got their own initials, right? TFI. I won't say what that stands for, but yeah. So the committee inquired about how FinCEN is doing with the beneficial ownership reporting regime and some of the other anti-money laundering initiatives out there, specifically cryptocurrency. FinCEN has been criticized for doing a poor job educating small business about the new reporting requirement. I think that's true. I don't have anybody jumping up and down asking me for it. Now, they could have spent $7 million like everybody else, and they could have run an ad at the Super Bowl. They could have had Taylor Swift say, hey, I did my BOI reporting. You should too. But no, they didn't do that. Okay, so someone is asking, do I recommend you hold all the tax returns and not e-file right away? We have e-filed every return because I'm not going to second guess what's going on here. I guess we should be thinking about our bonus depreciation people a little bit better, but I haven't thought about it. Okay, so FinCEN's been criticized, small job. We said this. Andrea Gacki, and then TFI Undersecretary Brian Nelson. TFI is so big they have a secretary and an undersecretary. They were questioned about crypto's role in financing illicit actors in terrorism, and of course, we know that's what goes on. Nelson noted during the hearing, crypto's financing of terror groups such as Hamas is troubling, but that the numbers in the media have been inflated. Very interesting. So Director Gacki echoed the sentiment as well. FinCEN recognizes the need, and they're examining all money services businesses to make sure that U.S. authority is not being threatened, right? They're looking at everything. Wednesday's hearing came months after FinCEN released its proposed rules for FinCEN, for cryptocurrency mixing services. So they're looking to change the anti-money laundering rules. And industry members, of course, are jumping up and down. These are the same people who are jumping up and down over 1099Bs. How will we ever do a 1099B for crypto trades? And, along came our friends at Robinhood who said, hold my coffee, and out it went a year early, right? So they can all do this. All right, so I'm going to address everybody's comments in just a minute on the filing. So Werfel testified before House of Ways and Means this week. Actually on Thursday, and he was asked about a bunch of things. So the committee made clear in advance that they think there should be a focus on the decision to delay the $600 threshold for the 1099K requirement for e-commerce platforms. I'm just going to go back and remind everybody, we already know that AUR, Automated Underreporter, only works 15% of the identified cases they get now, including people with multi-million-dollar there's a couple of sites where people didn't file 3 years in a row and had 7-figure 1099Ks. They were non-filers. The case didn't get worked by AUR. I keep saying FinCEN, by AUR. So what's adding? I think we did the numbers. It's going to add another 100 million documents, the way some of these things are. So what's the point of doing that? If the cases aren't going to get worked and we're just going to put more data into the database. But then again, we gave you $80 billion, figure it out and argue that one each way for them, right? Werfel was asked about IRS funding levels and ERTC and audit rates. Now, I didn't mention in the slides, the IRS asked for $800 million this year in current year funding, a pretty hefty chunk, but they've been getting the money. Now, another big topic is the bipartisan tax extender bill was brought up by Chairman Jason Smith, House Ways and Means Committee Chair Jason Smith. And he asked, how will the IRS handle the dissemination of certain credits if it were to be passed in the next few weeks? Werfel committed himself and the agency, that's a big put out there, right, to say me, right, me, Werfel, to ensuring that if the bill passes after you filed your taxes, we will get you anything you're due within 12 weeks, 6 to 12 weeks. So let's bet on 12 weeks. Lots of concerns here. I'm going to have a tax return that shows 80% bonus depreciation, but you're going to adjust it using Math Authority to put it out to 80 to 100%. But then the return is wrong in the computer. The return I gave you is wrong. So now for the next 15 years, I've got to remember that the first year was wrong. Have all the subsequent years been wrong? A lot of issues here about telling people not to itemize. You almost hope that some of these things like the depreciation go away, that they don't pass this late. So I gave you a link. If you want to watch the testimony, it is on the House website. So one of the handouts you were given is can you see all of these things? You should be able to see 5 things. The resources list has the link to go watch the video of Mr. Mr. Werfel's testimony. All right. Now, a couple of committee members asked him about the development of the direct file program. I have not seen this. I don't know anyone that's used it yet. The commissioner reiterated there will not be a mandate to use the program. So that's just a scare tactic, right? Oh, now that you have a program, we're going to eventually make everybody use it. They can't do that. Another option is another option for taxpayers to file their returns. And I think in a world where where a handful of firms control the bulk of the e-file data out there, the bulk of your financial data, I don't think this is a bad idea. I don't know that I would be the first guy to use it. I don't know that it's a bad idea. So Mr. Werfel asserted the agency's general authority to improve the taxpayer experience allows them to do things like create direct file. He says they can provide tools to allow taxpayers to pay their taxes, even though there's no law specifically authorizing this. We have a responsibility and an authority to offer taxpayers different approaches for how to meet their tax obligation, adding that direct file falls under this authority. There is a direct authority to implement the tax system in a way that provides tools and solutions for taxpayers to meet their tax responsibility. That's right, all those great worksheets you find in the form instructions. Now, I have a comment. Based on those comments, I'd like to remind you that Loving versus Commissioner, they ruled that the IRS regulating tax professionals was an overreach and beyond their mandate, yet they can spend money and do these other things. Werfel noted things like creating the automated telephone service or creating an Adobe form that can be filled in online are also examples that they're going to never specifically be identified in the law as something the agency has authority to do, but the agency can do so under its general authority. And so far, no one's stopping him. So this is an embarrassing statement, I think, but I know I go here too much, but I'm going to go here anyway. Mr. Werfel also in his testimony touted some gains in preventing identity theft. The agency now prevents 98% of identity theft attacks. No real explanation. But he commented, we are not resolving issues quick enough. No kidding, right? He was agreeing with something that came out of Aaron Collins' National Taxpayer Advocate report. Now, he said that resolving identity theft issues is a priority going forward. What the hell have you been doing for the last 10 years? Agency continues to work diligently to process ERC claims. We're going to talk about that to make sure people are getting their money. So this is a little out of order. That one should have moved. But, and remember, I throw a lot of this together in the middle of the night, Thursday night, and today in the morning before I do the other webinars. But 2015, the average ID theft case was resolved by the IRS in 120 days. And I gave you that link. I think I gave you that link. No, I didn't. Oh, it's a handout. Sorry. 2015 ID theft information. That is an IRS publication citing the 115 to 20 those days. The 120 days. In 2024, 19 months, 560 days to resolve the average. Average being add up all the times and divide by the number of claims. Average claims, 560 days. That means it's taking people more than 19 months. Werfel said since, all right, so back to, said, by the way, that's an absolute embarrassment. And they need to use some of the $80 billion to fix that, clean up these cases. Throw people at it like you threw them at return processing, like you threw them at ERC processing, right? Last April, funny how the sentiment changes. Remember, he said we were doing 30,000 a week. We're gonna get 60,000 amended 941s a week out, and they did. They met that goal, right? How about here? Throw together a couple of surge teams, get in here and clean this up. And it's interesting when you watch that video. He speaks well and he does a good job, but he's no Charles Reddick, right? Totally different speaker, and you feel differently listening to him speak. All right. So right now, the agency has approved, since the moratorium, they have approved another $1 billion in ERC funding. Just absolutely outrageous. I would expect that by this spring, we would have finished the work necessary to clear the inventory of claims and determine who is eligible and who is not, and then lift the moratorium. Well, they may not need to lift the moratorium because if the bill passes, we're going to shut the door. We're going to shut the front door as of January 31st. No new claims in the door. So inside Erin Collins, only because I really had nothing better to do, I went and found this. This is inside of Erin Collins' testimony to Congress, where you can see, if you look here, you can see here's the in 2019, right? It was about that 120 even still. And then here we are now with the 556 days. It's embarrassment. Look at how many claims there are, and just look at the, I hear you that they're closing them, but still, those are a lot of ID theft cases. Yes, Fred, ID theft got worse. The sheer volume got worse, despite what percentage they say they are stopping. So I do want to address those of you that are asking, should you file? Yes, I would file. Why? First, get most of the money in their pockets as soon as possible. To me, this is like the folks that come out and the return rejects because one of their 4 children, somebody else claimed, or the kid claimed themselves. And you're like, well, why don't we file now and get the $5,000 refund, and we'll get the other $500 after you fix this. Nope. I want all my money at one time. Okay, return sits here, and then a month later, well, where's my money? The return is sitting here. Well, what about that issue? Listen, when it resolves, you said you wanted to wait, and it just gets progressively worse. So we have not even presented to people the option. The return is done. We give them the return. In the event that a change happens that affects them, they're going to get their money in the mail. There's also no guarantee. I had this conversation with somebody the other night. So let's say they pass the bill tomorrow. Do you really think the IRS and the software vendors who don't have the other forms approved yet are going to jump on this and get it fixed and turn it around tomorrow? No, the IRS would still probably be 14 to 21 days out from even accepting those returns. You conceivably could run up against deadlines and still not have returns sent in. So I'm not holding them. We're filing them. I know a whole bunch of other people who are filing them. So, all right. Oh, so I meant to, again, I ran out of time, but maybe next week I will show. The client who, somebody else's client that we're doing rep work for, that went to their congressman for a congressional inquiry on their ERTC. One of the things that came back was an email where I think it's the congressman's office, not the IRS, that asked for this checklist to be approved that they're talking about here. And the other practitioner said to me, what are they talking about? Well, there's that eligibility thing where, do you actually understand what you're applying for? And if you think about these, some of you don't do payroll returns, or you're using Gusto and platforms, so you don't realize this. When you did the 941X, man, there's no data on there where your calculation came from, how many employees you have. Are you relying on decrease in wages, government orders, or the fiction of a supply chain issue, right? Don't know. So I gave you the link to this in the resources. This news release that came out, these 7 signs, and they also provide you with the worksheets. I explained in a previous episode where we had that, again, a rep case where, the IRS sent them a letter and said, you only issued 42 W-2s, so there's no way your ERC for 2020 could exceed $210,000. Please send us the $175,000 difference within 20 days. And taxpayers said, well, that can't be right. I said, you're right. It can't be right how much you claimed if you only had 42 W-2s. I said, and it might be even worse. They're just saying mathematically this was impossible. I think you're going to see more of those. I think you're going to see the IRS doing a number of these low-hanging fruit things. How many quarters did you claim? Were there even government orders in your state? The too many employees, the wrong calculation. Now, the supply chain issue. If the IRS had this to do over and could only make one change, that change would have been at the top. Under what authority are you applying? Decrease in sales, supply chain, government orders. Because they can count, they can look right at your revenue. As far as supply chain, I'm going to show you on a slide, the IRS thinks that very, 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 very few people should qualify for that. The lady that told me she was doing returns based on you couldn't get Fritos for the meal deal, yeah, all of hers are going to get examined. I'm hoping they take her EA license away from her as well. Too much ERC for a period, math doesn't work. Business didn't pay wages or exist, right? We go back to all the SBA fraud. We actually, I didn't put this in here either, but one of the high profile SBA cases early on were a number of firemen in a city here in Westchester County where 8 different firemen, including one of the lieutenants, one of the captains, had basically said they had these businesses they didn't have and gotten, a high 5- and 6-figure refunds or payments from the SBA that they weren't entitled to. So it's very interesting what was done, and they chose to prosecute them. Okay, reminder, the ERC disclosure program is open until March 22nd. Eligible participants can pay no penalties, pay no interest, and only have to pay back 80%. All right, this is bizarre. So one of the things you should be doing if somebody has a late return and comes into you, what we're doing now is we're going to the IRS disaster website and determining what the real due date might be if it's an out-of-state person, because you start to get that there's a lot of delays around the country. I mean, they listed how many different states had February 15th due dates the other day. So this counties in Michigan qualify for the storms. There's nothing really original here, except this week they said the August 24th, 2023 storms. Why did they go back that far? Primarily because this is when FEMA declared the disaster area. So in theory, you have people that filed a valid individual or business extension for the 2022 taxes, which would be due in respectively September and October of 23. Well, if they haven't filed yet or they filed late, they're now considered timely if those returns are in by June 17th, 2024. Personally, I think maybe they should have just said, by the way, we're going to go back and, these returns would have been due by February 15th had we caught this last year. We're now giving you February 15th, and if you filed late, we're going to fix it. Or if we previously penalized you, now we're not. So this could be some 2022 returns that are still going to be valid. Big marketing push, right? Let's get those returns done by June. And I listed the counties here where people might live. Wayne County, I think, is Detroit. So, no, maybe it's not, but take a look. SOR is going to be down. Those are the IRS secure mailboxes. It's going to be down on the 17th and the 25th. Those are both weekend dates, but if you recall, some transcripts that are too big, you can't print them directly. You can't pull them and print them. It tells you we're going to send it to your SOR. So in those cases, you wouldn't be able to pull those. But otherwise, this probably doesn't affect us too much. The taxpayer assistance centers are going to be open on 4 Saturdays this year, similar to last year, February, March, April, and May. Although March, I think they're out of their minds that April 13th is one of those dates. So folks can go and make an appointment on the website, or on these Saturday dates only, you can just show up. The only thing you can't show up and do is make a cash deposit. So typically those are our marijuana businesses that don't have bank accounts. They have to show up, and the primary reason you need an appointment for those is you have to have 2 IRS employees available to double count the money. So everything else they should be able to do. They should be able to get foreign language services. So for your clients that need an in-person identity theft verification or have some other issue during tax season, send them here. Get anything to get them out of your office, right? The IRS has suggested ways to be prepared. Bring photo ID. Bring the stuff you're coming to talk about, right? So if you're having a problem with a dependent, or you're having a problem with a specific IRS notice, you'll get your best help by bringing in that notice. All right, so now this was super late breaking. I included a link to this in the resources. We're going to read it, and I'm going to talk to Ellie and a couple of other people who do California work, and we're going to decide if this affects all of us and whether we need to do a webinar or not. I think this affects all of us, and we need to do a webinar. So a California appeals court has pushed forward a quicker implementation date and says the state can begin immediately enforcing the new privacy regulations, right? The California Consumer Privacy Act. So we need to all start taking a look at our compliance stuff, both our websites, our intake, our data storage. There's a 7-step compliance plan from this law firm that I gave you the link to. Don't ignore the regulations. Audit the contracts you currently have in place and update them to comply with this. There might be updated notices you need to give job applicants, your new and current employees. I don't do business in California. Maybe you do. Maybe you have an employee. Maybe you have a remoter in California. Oh, maybe we could have Fred Stein do a webinar on this. Yeah, say yes, Fred, if you want Fred to do the webinar. He's getting better. We won't have to call this "Don't Let This Happen to You" either. Issues, though, about privacy policies, the cookie banner, cookie management, right? So you do have California people coming to your website. The larger issue I have, though, in my mind, is the firms out there that want to sue and collect money, right? So is somebody going to sit there in their pajamas, one of these work from home people that call themselves digital creators? Are they just going to take a list of tax websites and go to them and say, aha, not updated, aha, not updated? And does everybody get one of those letters? I don't know. So I want to make sure if we need to get this done. So we're gonna have some discussions, and we'll bring in this could be a big roundtable type thing too. You bring in a practitioner who's in California. We bring in a practitioner who's not in California but concerned about it. You bring in somebody like Knox who wants to talk about the data security. I think we could have an interesting evaluation here. So, all right, Fred said somebody already did that. Oh, you mean the lawsuits, Fred? Yeah. Somebody's also done the parking lots too with the disabilities. So, yeah, this is a concern. So take a read of that article. It looked pretty well done. I did not have time to expound upon it, but I thought this was important enough. And the one point I'm going to say, a lot of you are in California or have some connection to California. I think we all have a California connection these days. So that was a line actually in the Johnny Depp movie Blow, right? Your California connection. But anyway. And that's it for this week. So thank you for wasting a perfectly good 40 minutes with me. Everybody stay strong. I'm working this weekend. If you're off Monday for the holiday, good for you. Otherwise, be well.